Well, the run-up has been very narrow, and there are plenty of bargains. The U.S. market has delivered a whole year's performance, a good year, in just 3 months. So you can, if you look outside the U.S., there's certainly a greater proliferation, and you see this in terms of valuation disparity between the Europe, Australia, Far East Index, EAFE Index versus the S&P 500. One trades at half the price of book value of the other, namely the international. And you get a very good ROE, a return on equity out of non-U.S., very competitive with the U.S. market. So there's a kind of a buoyance it's in the U.S. market that just doesn't exist abroad, and we think that's, my colleagues and I think that's somewhat unjustified.
So are you not concerned about the outlook for growth in Europe, for example, or you just think the valuations are so unbelievably attractive?
Well, I'm not sure I'd agree with either of those, Wilfred, but my colleagues and I, our job, our clients hire us to find undervaluation, and there's considerably more of that outside the U.S. market. It doesn't mean that U.S. stocks in aggregate are all overvalued. It just means there's large segments in the U.S. market that aren't competitive with non-U.S. And yes, where the fire burns the hottest, you'd mentioned European banks. Those stocks are very cheap. They are already discounting the type of crisis that the world endured in 2008, and yet we don't see a crisis. We just see slow growth. So yes, very undervalued. And the energy sector as well has a lot of undervalued stocks, in part because investors have so many more exciting places to go.
What's your top pick in the European banking space?
UniCredit in Italy. The UniCredit is run by the very competent CEO, JP Mustier, and who recently spoke at Causeway's conference a few days ago. And being well managed is crucial in the world of banks, especially European, where cost-cutting and capital management are the two levers the banks can pull. And he's doing an excellent job, and we think very little, if any, of that effort is recognized in that share price, despite the cleanup of bad debts. So there's this dark cloud of Italy hanging over those bank shares at 40% of tangible book value. That's book less goodwill, that we think is quite unjustified. This is a bank that has a huge presence in Germany, in Eastern Europe. It has access to some growth. But what it has is restructuring potential, and none of it recognized.